Welcome, everyone. It's the cryptolark. Super excited to have on today Mati Greenspan, and that young man there is Or Greenspan. How's it going, Matty?
We are having a fantastic day so far. Thank you very much for asking.
Excellent. Well, I'm super excited to have you on. For anyone who doesn't know, Matty's industry veteran. He's a former senior analyst over at eToro, an author, a licensed portfolio manager, CEO of Quantum Economics, and a professor over at the Coin Intelligence Academy. So your insights are definitely valued here on the channel. So we're going to be going through Bitcoin markets, what's going on with the larger geopolitical scene, and maybe even get into some central bank digital currencies later on in the chat. But
Oh, fun stuff.
oh yeah, we got the goods coming. We got the goods coming. So let's I think just
Definitely.
get straight into what are your feelings on the Bitcoin market right now?
Okay, so right now we've got a break above $7,800 per coin, which is a fairly significant level. If you look back historically, that level was a point of resistance in the Great Rally of 2017, November 2017. It took some time to get over it. Once it got over it, you could see that it was that was where the bubble started. In the bear market 2018, it played a significant role, and even on that latest rally in 2019, we had 7,800 playing as well. So we've just had a break above it. It hasn't been there since it came below it a few weeks ago. And the best thing about this breakout is that it is on high volumes,
Mm-hmm.
meaning that, well, the blockchain is actually not doing so great. We're only at around 800 million, almost $900 million per day passing hands on the blockchain, where the average, I would say, over the last year or so is about $1 billion. So you're just shy of that. But on exchanges, we could see some real excitement happening. Masari Crypto, for example, tracks the top 10 exchanges. Over the last 24 hours, we're seeing almost a $1.5 billion traded. And that's a number which, during this last lagging period of the last few weeks, we were seeing at maybe $250 million, and now it's up to $1.5 billion. So nice breakout. And on strong volumes, and the sentiment is growing. Twitter sentiment, as far as it was tracked on the Tide.io, is up to the highest level since even before Xi Jinping made that statement about blockchain and everybody got all. So sentiment is really good. Volumes are great. I'm really excited.
That's awesome. It's interesting how sentiment is such an important factor because we look at what investors are doing, right, and how they feel about the markets. And it's pretty interesting to watch that all play out. This opera of human emotions that is the Bitcoin market. So definitely interesting to see that too. Now, what are your thoughts on the Bitcoin halving? Obviously, now we're about 5 months out approximately, and do you think that we're going to see a lot of anticipation for that event? Are we going to see a lot of upward price movement from here on out? Do you think that the current price movement has anything to do with people trying to accumulate before the halving comes in?
Well, there is a famous statement which is imposed on us by our friendly regulators from across the globe. Especially as a licensed portfolio manager, I must now state it that past performance is not an indication of future results. And what that means basically is that we can look at the charts all day long until our eyes turn blue. I don't know why they would turn blue specifically, but we can only, history kind of rhymes, but it never really repeats itself. So we can't know the future. We can't know what's going to happen. During the previous halvings in Bitcoin and in Litecoin, we have seen that there was some excitement in the price leading up to the halving. The most recent, but the thing is that since the last halving, the Bitcoin market has come a very long way as far as being developed. So the fact that we have a market of $1 billion per day being traded on the blockchain, hundreds of millions of dollars traded across exchanges. Now we have Backed, we have Fidelity entering the picture. We have a much more developed market. So it's going to be a lot harder to understand what's going to happen in the future when it comes. Now, my feeling as far as this happening is concerned is that we're going to look at the effect that it's going to have on miners. And even there, we have a quite a different scenario and quite a different story from anything we've ever seen before. What we're seeing right now and over the last 6 months was a total innovation in ASIC technology, which is what the miners use. And they're basically getting these mining rigs, which are so above and beyond the performance of anything we've ever seen before, which is why we see the hash rate going completely nuts every single day. I mean, just throughout 2018, the hash rate grew about 6 or 7 times, if I'm not mistaken. And we've been pretty much growing ever since. I think we even just reached an all-time high just last week. So hash rate continues to grow at an exponential rate. And what's going to happen at some point is a lot of the old rigs that are still being deployed are going to have to come offline. My feeling is that a lot of them are going to run it right into the halving. And once the halving comes, they're just not going to be profitable anymore. So we could see kind of a hash war playing out and shaking out of the smaller players, shaking out of the old technology as it's upgraded. It's a funny thing, is when you ask, is something priced in yet? And the answer is always yes and no. According to current perceptions, sentiment, market understanding, the answer is always yes. But then once we get there, obviously there will be a different perception, understanding of what it is. My feeling is that we'll really understand the effect on price of this halving about 3 months after the event itself. Once crunch time comes, hash wars happen, everything gets shaken out, and then we look for price discovery on what does a Bitcoin need to be worth according to current use and awareness, adoption, perception, number of wallets and people actually using it for what it's meant to be used for.
That's it. That's it. And of course, miner profitability and all these things are a big factor. And one follow up on what you were saying about mining is. So we're currently, the current generation of miners, they're using these 7 nanometer chips. Bitmain said that they're releasing a 5 nanometer chip soon. I've just seen an announcement that Samsung is working on the 3 nanometer chip. So you're right, we are poised for just exponential, crazy growth in Bitcoin hash rate in the coming years as these new generations of miners. I mean, we already have incredibly powerful new generation of miners, and even more powerful generations are, that's the constant race to be that little bit better than the next guy, and those chips are in production. Those chips are coming.
Yeah, it's pretty crazy. I mean, you got to wonder about what the future holds as far as that's concerned, and the power that the creators of the mining software are going to have going forward.
That's right. It's becoming a really big money game. And yeah, there's still home miners who got a few machines running out in their garage or something like that. But we have to keep it real that the Bitcoin mining game has become a game of massive warehouses and hundreds of millions of dollars of investments. And it's getting pretty crazy out there. Now, speaking of the word million, a lot of people predict that Bitcoin is going to hit $1 million. Mwahaha. What do you think about these predictions? I mean, obviously we're totally just throwing it out in the wind here because who knows, right? But do you think that this is an asset that actually has the potential to hit $1 million at some point in the future?
Are people saying $1 million or are they saying zero? I'm not sure what day.
Depends on the sentiment on Twitter.
My year-end prediction at this point is anywhere between $100 and $1 million. So it could, quite honestly, it could go anywhere as far as price is concerned. The question that we should be asking is, what would need to happen externally of Bitcoin, like within the global economy, for it to get to $1 million? Mm-hmm. And my assumption is that any scenario that brings Bitcoin equals $1 million or 1 million US dollars has to do with a ferocious devaluation of the US dollar. That would be some sort of a hyperinflationary scenario. Or it could be something, even more mild, something like, just kind of downturn in the economics or stuff like that. I mean, that could happen as well.
Yeah.
But but then it evolves into, okay, what good is Bitcoin being $1 million if, $1 million buys you a meal at Denny's?
That's right. Well, I mean, Bitcoin is worth probably, I don't know, a trillion Venezuelan bolivars or something, right? Doesn't, mean
Probably a bit
that
more.
much.
Yeah,
Probably more, right? But this is the thing is you have to
right.
keep in mind, yeah, what's that fiat valuation that we put on it actually mean, right? And obviously,
I
one
think
Bitcoin's one Bitcoin, but go ahead.
the more noble goal here, Lark, would be when we actually, instead of saying Bitcoin is worth $1 million, we would set a goal that things start getting priced in Bitcoin,
This is worth
and
50
that's what,
satoshis. Yeah.
and that's when we know we've made it.
The unit of account. That is the day when we actually start talking about things in Bitcoin prices, not in dollar prices, payable in Bitcoin. We're a few
It's
years away
already
from that.
happening, my friend. It's
Is
already
it?
happening. Sure. I spoke with a guy today. I'm not gonna, no spoilers, but we're looking at a partnership of goods that he wants to price in Bitcoin. So,
Very, very
well,
cool. Very, very cool. I think as we see more settlements happening in Bitcoin, obviously, even if they're priced in fiat and settled in Bitcoin initially, we have seen some major international shipments. For example, I mean, 2 years ago, I think there was a big shipment of grain from Russia to Turkey, and they settled that in Bitcoin. And there's been a few other examples since then. So, these things will continue. Now, I want to expand out here a little bit into the sort of global geopolitics thing, because obviously we saw a big event this week with Iran where this high level general was killed in Iraq, and that sparked a lot of fears. So we saw gold and oil both moving up. Bitcoin has obviously moved up as well. Do you think that the move in Bitcoin has anything to do with the geopolitical situation, or is this just non-correlated?
well, I look. Obviously, it's not definitive, but my feeling is that the day of non-correlation with geopolitical politics is over. Um, no, I don't believe that. I mean, so Bitcoin. So as soon as the rocket attack had the U.S. Drone strike happened, I mean the reaction in financial markets was immediate. It was like instantaneous. Oil and gold and Japanese yen came in as the safe haven, and the stock started going down. I mean that was pretty much instantaneous. Bitcoin took a few hours, to build up momentum and to start, liquidating the shorts and all of that. So my feeling really was that on that day, there were some people who were sitting on the sidelines going, maybe I should buy Bitcoin right now. It could have even been one person for all we know, because Bitcoin is that small at this
Mm-hmm.
point where one large buyer can really move the price and have a significant impact. So my feeling was that somebody or some people really wanted to defend the 7K level, and Bitcoin was trading just under 7K, and it was basically just an opportunity presented itself to them where they could actually enact that, and it really worked. That's kind of my feeling with how that played out. But the fact that it's Iran is significant, because we know that Iran is a hotbed for crypto adoption,
Mm-hmm.
and certainly any kind of scenario where you have war between U.S. and Iran, or direct conflicts, that would end up pushing more users into Bitcoin, no doubt.
Of course, we see more users coming in, more people wanting to either preserve their wealth within Iran or to get their money out of Iran and send it to family members abroad. And also, of course, we've seen Iran increasingly been getting into mining over the last year or so. We've seen a lot more cryptocurrency mining coming into Iran.
The citizens, right? Not the government.
This exactly the citizens, not the government. So, which is very clever because electricity is very cheap in Iran. So, for the people who can get their hands on those miners, then they can be
Yes.
doing very
And we
well.
can keep it a secret from the government.
That's exactly right. That's exactly right. I mean, I don't know if the situation's changed. When I last researched into it, the importation of Bitcoin miners is officially prohibited. So, at the
Oh,
border, they've had
I'm
confiscations
pretty
and
sure
stuff.
they're tracking down users as they go, and
Yeah,
and confiscating equipment at this
yeah, and there's
point.
been confiscations of Bitcoin miners as well. So it's people are doing it. Obviously, the revolution will not be stopped, right? People will take
As it
charge of
was
their.
as it was in Venezuela, it still is in Venezuela.
That's right.
Like cheap electricity, and people go, wait a second, I can make money just by turning my computer on.
Yep. And I remember reading a few stories about Venezuela. Cops coming and knocking on people's door and taking their miners away and sending them off to jail. So this will continue. Bitcoin will continue to be the money of freedom, and it's amazing to see that people will go to those lengths to get their hands on the money of freedom. Now, I want to switch pace a little bit here to talk about the stock markets. Now, the S&P 500 and a few other of the stock markets hit sort of their tops recently, and we have seen a slight correction, not anything to speak of really, but they've gone down a little bit from that high top that they just hit the other day. Do you think that we're in for a major correction in the stock markets? And if so, do you think that Bitcoin will be a beneficiary of a major correction in the stock markets?
I would not bet on it. No. You don't fight the Fed. Quite honestly, you don't fight the Fed.
They got a lot of money to throw because they keep printing it.
Look, Lark. I'm sorry, but I've seen too many good people lose a lot of money by correctly saying that the stock market is overvalued at this point, and then the Fed jumps in to save the stock market's butt, and they lose theirs.
Yep.
So that's reality, and I especially not over the situation in Iran. Right? Yeah, there's a bit of risk-off sentiment, but come on, it really it went down 1%. Freaking boo-hoo.
Yeah,
and then recovered. Pretty
still
much
up 248% on this time last year. So
they're pumping cash in like there's no tomorrow these days, and I wouldn't say to try and guess when that dynamic is about to turn around. It just doesn't. It's just not a profitable trade, my friend. Look, if there is a big one coming, a big correction, that is. I think that we'll know about it, and I think that the catalyst will be certainly more understandable and prevalent at that time. Something like, I don't know, whoops, we printed too much, and now there's way too much dollars in the system. Oh my God, how did that happen? Right?
And we just happened to give it to all our friends before we gave it to anyone else.
My gosh, we just can't pay the ticket on all of our debt right now. We just have too much debt, and students. And he's laughing. And students can't pay off their loans, and corporations borrow too much. How did that ever happen? I think that would more, but we would see more significant declines. We would see analysts get up on the television and say, "Hey, this is what's happening." I think that at that point we could react to it. But right now, what's happening in the Middle East? I mean, come on, everybody knows wars are bullish.
Yep. Unfortunately,
World War II brought America out of the Great Depression, right? Come on, it's BS, but those are the lines that are gonna emerge should that situation manifest.
It's a very unfortunate that that's kind of the conversation. It'll be great for the stock markets. Let's go and bomb somebody. It's a wild world we live in when those are the equations that the people in power make. Now,
you gotta buy those bombs somehow.
That's right. Now, obviously, what's your thoughts on the U.S. debt overall? Because it's just the amount of interest to service that debt's going to start becoming completely onerous within the next few years. So how long can they keep the choo-choo train going with free money, even if they have all this debt going?
Well, they think that it's indefinite. I mean, we saw Alan Greenspan, obviously no relation to myself, on the television. He's the former head of the Federal Reserve, and he basically said the U.S. can, never default on its debt. Will never default on its debt because it can always print more money. And I was guessed that they actually said that.
He said the quiet part out loud because they don't care anymore.
Right? Seriously. And we also had Janet Yellen, who during her term, and she was the Fed chairman, the previous one before the current Jerome Powell. And Janet Yellen basically said, we will never see, given the amount of liquidity that we've pumped into this market, she didn't say that part, she said, we will never see another financial crisis in our lifetime. So they are pretty confident that they've fixed it. Mm-hmm. That they've managed to put enough money into the system to not see any kind of crash anymore. That the problem with that is then the money becomes the weak spot, not the stock prices.
That's right. It's interesting they have, of the projection from the government and the central bank is, there's so much power in the economy, everything's going to be fine, right? But then you have this overnight repo market, which is this weird situation where the banks kind of stopped trusting each other as much for these rather obscure part of the economy that most people have no idea about. But the overnight repo market, do you think that that's any kind of systemic risk? Is that kind of the canary in the coal mine that's saying, wow, there's some real rot going on here and something bad's going to happen? Or is this just they're going to keep throwing money at it? Don't worry about it.
So I kind of disagree with your premise, Lark.
Mm-hmm.
Nobody really understands the repo market. I mean, people who touch it every single day don't really understand it. And when those rates started spiking, I mean, I was watching. I'm like, I could not find. There was not one analyst who got up on the television and said, "Hey, this is why it's happening. We know why it's happening." I mean, the reason that it happened was that the money dried up. Right, mm-hmm. People were looking for money to fund those short-term loans, and there just wasn't any in the system. It was being used. Basically, the money was being deployed, and banks had run low on that excess, on those excess reserves that would usually be used for those short-term loans. So it's not an issue of trust. It's just an issue of lack of liquidity. And the disturbing thing is that you're telling me that your short-term loans are lacking liquidity, right? That thing called liquidity that we've been pumping nonstop and excess of into the markets for the past 10 years, and you're telling me now you don't have enough. That's more than a little disturbing. And the response that the Fed gave was huge. The Fed hasn't really interfered into the repo market since about 2009. I posted a chart of this on Twitter, I think it was either today or yesterday, of their interventions into the repo market. And the one that they did just now in September was actually the biggest intervention that they ever did into the repo market. And that's even more than 2008 and even more than 2000 when during the tech bubble and liquidity dried up there as well. So like, if we look at the Fed's balance sheet, right, basically what happened is it started to go up. It went up to about $4.5 trillion after 3 rounds of quantitative easing. They basically printed all this money, $4.5 trillion out of nowhere, and bought bonds and other things with it to beef up their books. And they started on a good path with Jerome Powell, like when he got in and he was talking about, we're going to start offloading some of this stuff. We're gonna reduce our balance sheet, and they did for a while. They were like on a 6-month course, and then that thing with the repo happened, and they were just like, boom. To me, okay, so imagine a junkie, right? A heroin junkie, right? And quantitative easing is the fucking drugs, okay? And the market needs those drugs to keep getting high, literally high. It goes higher and higher every time. They're chasing the dragon.
They're chasing the dragon.
Okay, every single time they shoot liquidity into the market, they need a bit more liquidity every time to get to that bigger high. Now, 2018 was a marvelous time when they were actually getting clean, right? In 2019, beginning of 2019, they were actually getting clean. They were taking less and less and less, and they were not putting any liquidity into the market. They completely stopped quantitative easing. They had no intervention whatsoever, and they started offloading their books, get clear-eyed again. And then the repo market came, fucking fell off the wagon, man.
Straight back onto it.
and now they're shooting up more than ever, right?
That's disappointed. That's wild. It's a really good analogy, actually. Now, I want to change pace here a little bit, and this is our final line of questioning here. Big thank you to Orr. He's been very, very well behaved during this interview, which is fantastic.
He has. Good baby.
Now, how do you feel about central banks getting into crypto? Or their digital currencies, we should say.
Yeah, exactly. They don't call it crypto, and neither should we.
Yeah.
We use the term CBDCs. Central bank digital currencies, and so it is quite concerning, I think, on many levels. The Libra kind of really kickstarted this whole thing, and I wrote about it in this morning's QE newsletter as well. So the money that they've created and all that liquidity, you know where it went, right? It went into the tech stocks. It went to Jeff Bezos and Mark Zuckerberg, so they could continue to do what capitalism is meant to do and innovate. Right? That's this is all of the money that we're creating is either going to the military or is going to Zuckerberg and Bezos and Satya Nadella and all of those wonderful people who are innovating in the country. And then the fruit of their labor, right? The fruit of all of that liquidity and all of that money and all of that investment comes to you and says, okay, we need a digital currency. We need to innovate on the money section. And then the government's like, no, we can't do that. We have to protect the US dollar. And then the rest of the countries looked and say, oh, so you mean the dollar refuses to innovate? Let's do that.
Yep.
Okay. And that's what China did. And China actually, to be fair, they've been looking into blockchain since 2014. They have released white papers during that time and have done significant research. And they were sitting on the sidelines. How do we use this? Once Libra happened, once Zuckerberg came out and said it, they're like, okay, now's the time. We're good. And what they're going to do with the renminbi is basically, China already has a working digital currency, right? The renminbi, China's a cashless society. If you go to China right now and try to spend cash, they're going to look at you funny. They're going to send you down the block. Like, why can't you just pull out your app and pay like a normal person? Okay.
That's crazy.
That is China at the moment. And it's very difficult to actually spend paper. People pay through WeChat and Alipay, basically, primarily. So what the People's Bank of China, the central bank in China, are doing here is it's an upgrade to the system. So a back-end upgrade, right? People are going to still pay through WeChat and Alipay. But what happens is on the settlement side, instead of WeChat and Alipay basically taking care of those settlements through their banks, what's going to happen is that the People's Bank of China is going to be the final settler of all transactions. They'll be able to do it really quickly.
Mm-hmm.
That in a sense, CBDCs are really good, a really great tool for central banks because A, they give them total visibility, right? When there's cash in this in the society, and Australia was just complaining, and even Steven Mnuchin in the United States was saying, "Hey, we don't know where all the cash is," meaning that some people take it, put it in their safes, right? People put it under their bed, whatever people do with cash, or they use it for nefarious purposes or whatever they're doing. But the problem is that we don't know where it is, and we don't know what to do with it. And so CBDCs solve that for them. It gives them total oversight on where all the cash is. And it gives complete reconciliation as well, as far as when you're looking at overall finance and stuff like that. As far as China is concerned, it will help the Chinese government to have a harsher oversight or to maintain their control over the population. We know that China is, if you're living in China, it doesn't look like it, but we as, people outside of China look at it and go, really, your government, the government basically owns you. Mm-hmm. And we know that anybody who speaks up against the Chinese government in particular is in for a bad time in China. And we know that they are doing some very likely, they're violating human rights in many cases. To put it lightly, some people have even called it mass genocide. I haven't been there, so I couldn't tell you firsthand, but that's more or less that's for you to do. Transactions, and have a greater level of understanding of who their people are, and also to freeze transactions that they don't like or whatever it is.
Mm-hmm.
So
that social credit system and all that scary stuff.
Exactly.
Really scary stuff.
Exactly. This is 1984.
Absolutely. It's like the Chinese government read that and like, oh, this is a good idea. Let's do this.
Yeah, we've seen videos emerging on Reddit, for example, of people getting arrested just for saying stuff on the internet against
the re-education camps and stuff like this. It's a really scary thing
Yeah.
for China is on the one hand, you have all this amazing technology and all this kind of innovation and high speed rail, and everyone's using digital payments. And then the government's like putting people in re education camps and, not letting you buy a plane ticket if you had a bottle of whiskey last night or you're a socially undesirable person or whatever. Like, it's crazy.
Right. Yes. So China is a different problem, but what bothers me about the CBDCs is Europe, right? Because Europe's not like that for the most
Mm-hmm.
part, right? But should they implement a CBDC, they run the danger, depending on how they implement it. It's still very early days, but from what I've seen, and I published in my newsletter about a week ago, a blog that basically it was called the digital euro is dystopian as fuck. Um, Basically, they put out a white paper called "How to Integrate Privacy into digital coins or central bank digital coins." And I said, wow, that's a great title. I'm very happy that they're concerned about this because this is a concern that I have as well. And then I read the paper, and then I was even more concerned because
Oh, man.
their proposed solution was that we issue privacy vouchers, which allow people to make small transactions up to a certain amount every month or every given time frame. And those will be private. The sender won't know who you are. The government won't be able to track it. Your wife won't be able to go, hey, why are you buying those candies? I mean, you got to watch your sugar level, right?
Yep.
And that's kind of how Europe sees privacy at the moment. But the larger transactions, they have to go through the European Central Bank. They'll be visible to any AML officer, anybody who's looking into anti-money laundering. And
Mm-hmm.
watch the rhetoric with these people because they keep saying this word anti-money laundering like it's the end all be all of ethics. Basically, they're just going to say any transactions that are private and large are going to fund terrorism. They're going to human trafficking. They're going to blah 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 blah. And there's no reason, and they're evading taxes on top of it. So there's no reason why anybody should want privacy of large transactions. If they are clean, right?
Yeah. Yeah, it's thought crimes with your money, right? You're guilty until proven innocent when making large transactions.
Exactly. So this is basically, to me, it's like saying, okay, we're going to set up cameras in your entire house, except the bedroom. Do whatever you want in the bedroom, but most crime happens in your living room, so we're going to need to keep an eye on that one.
Oh man, it's a good analogy. Now, the last question here, and you can just be a short answer if you want. Do you see all these central bank digital currencies as really just a big acceleration in the war on cash? And do you think that cash is in kind of terminal decline as a tool in society?
Well,
Maybe that's not a short answer question, but
so the war on cash is also concerning for the very same reasons. However, I mean, cashless society, yes, it's been hastened in China for the wrong reasons, but if we look at a place like Sweden, for example, they went cashless simply for convenience, right? They're like, well, I'm gonna get these paper and metal things out of my wallet when I can just swipe a card or my cell phone, just click it on the thing. We're good,
yeah,
right? And I completely understand that. So CBDCs could be a very good tool for managing that, but they could also be, if implemented the wrong way. And we're still early days. So
yeah.
my hope is that Europe comes to their good senses and creates a good example for the rest of the other, I think it's like 30 other central banks who have already said they're looking into creating their own central bank digital currency. The dollar, I'm sorry, but the United States is going to be fucked on this one. The dollar will very likely lose its reserve currency status simply because they refuse to innovate.
Yep. If you don't innovate, you fall behind. Thank you so much for coming on today. By the way, there's links down below. So if you want to follow over on Twitter, get signed up for the newsletter and all that stuff, make sure you check that. I'll put those links in the description so you guys can follow along for more great insights like this conversation we've had today. So thank you so much for your time. I really, really appreciate it.
Great to meet you, Lark.
Thank you.